Today I'm going to answer a question from an e-commerce business owner who wants to reduce their taxes and dispel some of the most common misconceptions about reducing taxes while moving your business offshore. Hi, I'm Andrew Henderson. This is Nomad Capitalist, with the channel and the company that helps 7- and 8-figure entrepreneurs and investors legally go where you're treated best. You can learn more at nomadcapitalist.com. And I wanted to share with you a question from someone named Chris, who runs an e-commerce business and wants to reduce their taxes. This is an element that we've been helping for many years successfully save collectively hundreds of millions of dollars. And the question is, for a digital nomad who travels a lot, is currently a resident of the U.S., is there an option to create an LLC in another country, sell products online, and have it tied to a local bank and not be required to pay U.S. taxes like one of the Eastern European countries? And there are a number of answers and replies to this question. Some make good points. There are some misconceptions in the replies. So I wanted to address this question directly, part by part. So for a digital nomad who travels a lot, that's good. So one of the first things that's important is if you are running a pretty simple business, maybe it's just you, maybe it's just a few employees, you're not going to have the same tax incentives that a big, huge company has, whether it's the kind of companies that we've worked with that have 200 employees around the world and we can maneuver, or whether you're Google or Starbucks, you're going to have fewer options. And so generally, you're going to want to be outside of your home country for a substantial amount of time, maybe as much as roughly 11 months a year for Americans in certain circumstances, maybe 8, 9, 10 months a year for citizens of other countries. It really depends. And there are some countries that are pretty flexible, and as long as you spend less than 6 months there, you'll be good, although that number of countries has dramatically shrunk over the years. And so traveling a lot is important. Now, the one thing that I think is important for many countries, not the US, where Chris is from, but you are going to want to have some kind of tax home. And so if you're leaving your country, let's say Canada, or let's say Australia, if you can get out, you are going to want to just not be a digital nomad who is spending a week here, 2 weeks there, and then going back to Australia, again, assuming they let you in, for 3 months a year. That's not a great plan. You're going to want to have some kind of tax home, either one that you get by spending a decent amount of time there and making it your real bona fide residence, or by having some kind of tax home that you make through some kind of investment or pay a fee or have some kind of connection there. So there's different ways to get a tax home, but if you're a digital nomad, simply staying under 6 months in your home country is not good in most cases anymore, and simply just floating around may not be good in many cases anymore. Obviously, there's so many different scenarios. I can't get into everyone's situation. Now, let's go to the second part. Is currently a resident of the U.S. I am a little bit confused by this because U.S. citizens and U.S. green card holders are taxed by virtue of their being a U.S. person, no matter where they are in the world. Now, I've seen a couple of cases where we've worked with folks who have U.S. green cards, who've been living in the U.S. and they want to go overseas. Having a U.S. green card, you don't have the same flexibility as a citizen simply to never be in the U.S. And so you have an immigration issue as well as a tax issue to resolve. But there's really no such thing as a resident of the U.S. in this context, because if you are either one of those categories, then you are a tax resident of the U.S. and you're going to pay no matter where you live. Again, if you're a green card holder, which is a resident from an immigration standpoint, you're going to have the issue of needing to maintain that U.S. connection in order to not lose your green card. And so anyone with that U.S. person status is going to be liable for taxes, really no matter where they are in the world. So the question is there an option to create an LLC, which is obviously a business structure that many people in the U.S. use. In other countries, many of the kind of companies that you would want to use would be more like a C corporation, would be on that level, so a limited company or something like that. Other countries do have things that are called LLCs and may even be limited liability company, but aren't the same as an LLC in the United States. So certain countries might call what's the same thing as a C corp in the U.S., they might call their version an LLC. It does not mean it's the exact same thing that the U.S. has. So can I create a company? Let's not call it an LLC, but can I create a company in a country, sell products online, and have it tied to a local bank account and not be required to pay U.S. taxes? This misses a couple of issues, because the first thing is what we just mentioned. If you're a U.S. person, you're going to have tax liability. I'm going to mention how you can mitigate that in Chris's case if you have an e-commerce business or an online business in a moment. But the mistaken assumption that happens many times is that taxation in the U.S. or in other Western countries is based on remittance. And there are a few what's called non-dom countries. However, if you're a citizen, it's going to be much more difficult. So let's just assume that by and large, the simple issue of I have a company overseas, I earn money that goes into a bank account overseas, whether it's in the same country of incorporation or a different country, but neither of them are my country. And as long as I leave the money there, I'm not taxed. That's simply wrong. Again, if you're living in Canada, Australia, the UK, what have you, or if you're simply a US person anywhere, your company is going to be subject to tax in your country as a controlled foreign corporation. There may be other issues like a permanent establishment or management and control. There's a lot of different things where these countries say, hey, if you're living here, or again, if you're a US person, if you have status, we are going to come and try and tax your company. And so it's not simply a matter of I never brought the money into the US. In fact, there are cases where you could keep the money in the US, and that doesn't really make a difference whether you're a citizen or whether you're not a citizen. The issue would be simply what is the tax treatment of where the work is being done. Now, as to the part about the Eastern European countries, if you're an American, the Eastern European countries may not offer the advantages that many other countries offer. What Americans now have in the last several years is something that's called GILTI, which is too complicated to explain in Chris's case in this short video. But an Eastern European country like Bulgaria, may not even meet the threshold. Other Eastern European countries may meet the threshold, but if you're paying tax in the U.S. regardless, there's a lot of different factors that go into this that need to be explored. So I'm not sure why exactly Eastern Europe. It's sometimes easier for Americans just to set up in a strictly zero tax jurisdiction and then deal with the U.S. rather than the complications of dealing with two different tax regimes. And so the issue here when it comes to e-commerce, there's a couple things. Again, are you a U.S. person? If you're not a U.S. person, are you living in some other country that taxes you on a residential basis? So whether you're American or whether you're a Brit, living in the U.K. and running your business from the U.K., doesn't matter where the sales are made. It doesn't matter, where the business is run. It matters that you're sitting there in the U.K. And so the other issue that does come into play, and that there are certainly a number of factors to consider that we shouldn't go into here, this is not tax advice, is if you're selling products online, there could be a difference between someone who's drop shipping and someone who's using third-party warehouses and someone who owns their own warehouses, with each of those being kind of progressively worse. And so if you're selling stuff online, it's worth evaluating, how is the product getting to your customer? This is different if you're selling software as a service, if you're selling consulting, if you're selling something that's not tangible and it's not shipped. But if you're selling something that's shipped, different countries, including the United States, may have some say in terms of saying, well, wait a second, do you still have a business? Even if you have left, because we said the first issue is if you're running a small online business, you should leave. If you're an American, you should go overseas. You should spend the vast majority of your time somewhere else. Are you still, connected to the U.S. because you are fulfilling product in the U.S.? That's an issue that comes into play with e-commerce businesses. And so your status, where you live, what kind of business, where the product is touching, where it's coming from, where it's manufactured, all of that. And so for most small e-commerce businesses, you want to try and distance yourself as much as possible, because the whole issues of transfer pricing and having different companies around the world, it's just going to be more difficult. And so answers to Chris's question included that, you have to renounce your citizenship. That's not true. What you can do as a U.S. person is you can avail yourself, first of all, the foreign earned income exclusion. So whether you're doing business in your own name, or whether you're doing business in just a U.S. LLC, or whether you're doing a business in a foreign company, you can personally take about $108,700 in 2021. That number goes up a little bit every year, out as a tax-free salary. You can also add some other deductions in there, so potentially you can take $9,000 or $10,000 a year out tax-free, income tax-free. Generally state tax-free, although there are some people who get stuck with state tax or need to do some work to get out of state tax. Now, if you're running that through certain U.S. structures, then you may have other issues with things like Medicare and Social Security. And so if you're making good money in your business, you probably want to set yourself up as a foreign corporation to reduce what you're paying, not only in terms of income tax, but in terms of the Social Security and Medicare. And you can get that down to zero if your business is making in the low six figures. Now, what you're going to have above that is, depending on how your business is structured, depending on if you own the business alone, if you have partners, a number of different factors, you're going to have either 0% tax, or you might have to pay something to the U.S. on everything that you're making above the salaries on that profit. And so it might be zero, it might be come out to an average of 5% or 10%, depends on how much your business is making. So U.S. citizens can greatly reduce their taxes living overseas and running a business, and running a business is one of the most efficient ways to do that. However, you still have potentially some obligation to pay, again, depending on how your business is structured. and you may have an additional obligation to pay even if the business is perfectly structured if you have connections where you're doing business in the US. And so again, I'm trying to paint a broad picture and not give anyone specific tax advice. Depending on how successful the business is, again, the tax rate could go up in terms of the overall perspective of the business. And so I think people often understand the foreign earned income exclusion. That's all you can take out tax-free, and that the rest just gets taxed at full rates. No, you can still dramatically reduce the tax and potentially, in some cases, eliminate the tax on the rest of the business. But when it comes to e-commerce, you've got special things in the physical world to be concerned with. So those are all the factors that go into it. I think that people often say you have to renounce your U.S. citizenship. That's not always the case. What you might also want to consider, if you don't want to be overseas for 9, 10, 11 months a year in other countries, is looking at Puerto Rico, where you can still take advantage of the Export Services Act in many cases. Again, with e-commerce, you'd want to evaluate what work could be doing in the U.S., or could be happening in the U.S., and make sure that you are properly in Puerto Rico. But that could reduce your taxes, depending on how much you're making, to a lower rate than you would pay offshore for e-commerce. The other fact that you should consider is if you're building an e-commerce business and you plan to sell it in the future, what are you doing as a capital gains tax mitigation strategy? And so if you're building a company, or I've had people who build Amazon stores, they sell them for $10 million. If you leave the U.S. when you've got a $10 million business, they're going to, if you're expatriating, tax you on that $10 million when you leave, and then you get any future gains. If you're moving to Puerto Rico, they're going to use a different strategy of kind of how long you've been running the business. Either way, the longer you wait, the more capital gains tax you'll pay on the sale. And Joe Biden's been talking about raising capital gains taxes, so you'll want to prepare for that. So all in all, an e-commerce business, you have the option of going offshore. You have the option of Puerto Rico. You can keep your taxes in the single digits or low double digits. I probably wouldn't be in Eastern Europe in many cases. If you're in e-commerce, you have the separate issue of how am I processing people's credit cards, which is going to be difficult in many of these countries, so you might want a multi-pronged structure. So there's a lot of things to think about, which is why I'm being a little bit vague here, because there's so many different factors that have to be evaluated. It's much more difficult than, let's say, a consulting company, or again, even a SaaS company, because you've got physical product. But the bottom line is you can dramatically reduce the tax depending on how big the business is. You can use a foreign corporation to do that and to reduce the tax further, rather than just running it in a U.S. structure like an LLC that you might have already had set up, or running it in your own name. But the simple remittance basis of the money didn't touch the U.S. isn't the issue at all. So those are some things to think about for lowering taxes on your e-commerce company. Don't stop now. We've got well over 1,000 more videos here on YouTube for you to watch and learn how to go where you're treated best. And if you want to work with Nomad Capitalist personally, go to nomadcapitalist.com/apply, learn about our unique, tried and true process, garnered over years of experience, and learn how you can become our client.